why did you buy this property? Oh, cash flow. Where's this cash flow coming from? Oh, the rent. It's $650 a week and I paid $500 for it. Hold up. You borrowed 80% from the bank. You're paying interest at 6.5% on 100% leverage. I told the client, you're not getting any cash flow from this property for many years. Every successful investor I had has put a business plan in place. And the people that haven't, I haven't seen them hit success yet.
Welcome, Jeremy.
Thank you very much. I love it.
Mate, let's get into it. Let's talk about business plans for your property investing, right? Because property investing is a business.
Absolutely.
And you need a plan. So you see many, over the course of your career, you've seen thousands of investors,
Absolutely.
right?
Yep.
Now, talk to me about the ones who have a plan versus those who don't and the difference.
Well, I'm going to make a very simple statement. I'm going to say that all the successful investors that I manage, and we're talking people with large portfolios.
So 10 plus.
10 plus, making good money, not just, losing tens of thousands of dollars. I mean, genuine passive income, have all had a business plan.
Yeah.
Have all had it. And the people that have not had a business plan, and that's me, trying to bring the stick out and bashing them into it, saying, guys, you need to do it. Mm-hmm. They just don't have the time. They don't know where to start. They really want someone else to do it for them. They're the ones who aren't successful. I'm going to limit and probably say that they never will be successful. Why? Because if you don't have the patience, and if you don't have the stamina, and if you don't have the want to be able to do your own business plan for your own personal success, then why is it going to come to you? It's never going to come to you. You've got to put the hard work in early. You've got to get, your 5-page document. My father always said to me, don't come to me with what you're telling me, put it on paper. And that's how I learned to do business plans. I wanted to do this, and this. Even today, Dad, I want to do this. Do you want to go in with me? Where's your business plan? Give me that one pager. And it's not about, he knows that it will be successful. There's proof on the board, there's runs on the board. But if I'm not willing to put on paper and spend the time to share with him what I think will happen and how it's going to happen and what I've done to mitigate risk and where I'm going to get the money from and my strengths, weaknesses, opportunities and threats. If I'm not prepared to do that, then he's not going to spend his time to be prepared to give me money to execute and make it work. And that's what really resonated with me and stays with me today. I do a business plan for every property I transact, every property I purchase. Why am I buying it? Where is my exit strategy? What am I going to do from it? There's a recent property I've purchased down in Oak Flats. It's a waterfront property and a cracker waterfront property came up about a week after, 2 weeks after. I had a business plan for this property. How am I going to exit it? What can I do with it? That property's on the market receiving multiple offers today. Multiple offers for more than what I paid for it because I had a business plan to exit it if I needed to, and I was able to buy a much better property that came on the market weeks after that. So you need to understand what you're doing, how you're going to do it, how you're going to exit from it. What do you want to achieve from this particular property, whether it's balance sheet growth or profit from rental activities? And if you're not doing that business plan for each property or the entire portfolio, you will not be successful.
So a lot of people that I see just that they buy things randomly because you'd be surprised at some of the justifications. They are, I heard, I have a family member, or I heard from someone at work they're buying in Perth. That's it. That's the level of planning that's gone into it. Honestly.
Well, again, to put an example of the Perth properties that I bought, I'm holding one out of the 4 that I bought there.
How many jigs? You exited 3.
I exited 3.
Yeah.
I bought at a time when it was 2019. I bought a couple in late 2020. There was a couple that I used equity that I didn't even go to the bank because I had all this capital from equity that I released. Yeah. So I was able to transact on it very quickly and have the title, but it came from borrowed funding. So it wasn't outright cash paid property. It was just that I had a huge pocket of equity that I extracted from other properties. But my exit strategy in Perth was I was going to buy them, hold them until a certain point of which I felt they'd done very well, and then exit. That point came a lot quicker and was a lot more than I anticipated. And the reason why I wanted to exit from those properties because it was 4 hours away. I'd seen 5 hours away on plane. 2 days probably by driving across the Nullarbor. I'd seen that costs there in WA are always high because I had a number of properties that had bought there during that boom of 2009 and 2010. So for me to get in and get out and exit was good because I then used that money to go and purchase some quality properties on the Eastern Seaboard, some commercial properties and some really good residential properties, which I have since developed or in the process of developing.
Nice. And it's very, very important. It's very, very important to have that plan in place so you know where you're going. And that's what I'm seeing that a lot of people don't have when they come to me to start. They are literally just coming just based on what they heard on the net or what they've seen on the net. And that justifies the plan. So every property has a place in your portfolio and it's, some of them are longer term, some of them are shorter term, but the way in which I see it is everything needs to be reviewed every 6 to 12 months. And I'm a big fan of selling whatever's not serving me and where I could redeploy that capital to something or somewhere that furthers me to where I want to be.
Absolutely. And I tell people, I'll give you some good examples. I'm a big person of war stories, right? Because I get to see so many people doing so many different things. Why did you buy this property? Oh, cash flow. I bought it for cash flow. It's getting $650 of rent per week, and I paid $500,000 for it. Okay, where's this cash flow coming from? Oh, the rent. It's $650 a week, and I paid $500 for it. 7% yield, 6% yield. Hold up. You borrowed 80% from the bank. You took out 20% equity from your own home, so you're 100% leveraged. You don't realize that you're paying 9-10% property agent fees. Your council rates are $3,000. Your insurance is $2,500. Your net yield on this property is now dropped to 3% or below. You're paying interest at 6.5% on 100% leverage. I told the client, you're not getting any cash flow from this property for many years. Well, what do you mean? You're not getting any cash flow from it. What is your other plan? Why else did you buy it? No, I bought it for cash flow. Okay, well, let's just turn the tables a bit. Let's try to make some silver lining out of your business plan because you didn't buy it for cash flow. It's not getting it. The capital growth. That property they bought for $500, it's now worth $650,000. Well, that's a return. But because they didn't have a business plan, they didn't understand that, okay, there's no cash flow on this particular property because of the way I've funded it and the costs attached to holding it. But hey, it is a hotspot and it has grown substantially. Now I can maybe exit that if I want to and look for genuine cash flow properties. You and I were sharing with you one that I did in Queensland. I paid low twos for it right at the start of COVID. Yeah. I exited it for sixes, sold the property because it needed a bit of work, contingent liabilities of roof and kitchens that needed to be done. I exited the property and bought a commercial property in Burleigh Heads for $950. That someone,
like that Burleigh Heads.
Yeah, someone paid $1 million plus for it. They had to exit it because of the lease stock loan requirements. I got in at $950. It's getting $70,000 net rent. And it's a triple net lease, meaning the property agent fees are paid for by the client. My total hard cash in that deal is only $50,000. People are going to go, how'd you buy $1 million property for $50,000? Because the $50,000 that I used to purchase the Kingston house had grown in value, paid the tax on the sale. I had this beautiful money that came from the clouds, plus my deposit of $50,000, used that to buy Burleigh Heads. My rental income went from $25,000 gross to now $70,000 net. That was my business plan for that property. Buy it, exit at a good time, and then move it into a genuine cash flow deal. So it comes back to what I originally said. Every successful investor I have has put a business plan in place. And the people that haven't, I haven't seen them hit success yet.
So it's very important with what we've got a portfolio acquisition plan for our clients, right? So with a portfolio acquisition plan, it's based on each individual property, and each individual property has to get you to your next property. As the buyer's agent, this is aligned with, look, everyone's got a different accountant, financial advisor and so on. Not all of them align with the way in which I see things, but I can't advise too much on the accounting and so on. But in regards to the type of property that you need to be buying in your portfolio, that's the main thing we advise on. And everything needs to make sense in order to get you to your next one. I think a lot of people are sort of glossing over and just buying deals for the sake of buying deals, or from the perspective of FOMO, kind of like, I've heard Townsville's on the go. I want to just go to Townsville because I heard. I watched a podcast, for example, and I know we're on a podcast. That's funny. But they're just doing things for the sake of doing them. And I think that's why it's critical to put those in place and have one, not just for each one, but for your entire portfolio, and then come back and review it. We have a 6-monthly review for all our clients at Pinnacle. It's absolutely important.
Yeah, absolutely. And you have to always reflect, what have you done? How's it performed? Is it still part of the business plan? Now, you'll hear on a lot of podcasts by a lot of property professionals, what's your goals?
Yeah.
I want to take the word goals out.
You don't like goals.
It is a wishy with goals. Everyone's got goals. You score a goal at soccer. You kick a goal at football. Oh, fantastic. Goals is the buzzword. What are your goals? Scrap the word.
Yeah.
What is your business plan? Because I think once you start to really use heavy words like business plan, it either scares you or it excites you. And if you're excited by putting a business plan together for your property portfolio, because remember, you're buying millions of dollars worth of property. If you were buying the local tuck shop down the road for $25,000, I guarantee you most people would be petrified in buying a $25,000 tuck shop little business because they have to put a business plan together for the banks because they might be lending you $20,000. Do that for your property portfolio, because if you structure things early and you have a stepping, each property becomes a stepping stone, which then gives you the opportunity of putting your left foot in front of your right foot. Well, then that's what advances you.
Yeah.
I challenge anybody listening to this, and if you're listening to this, put into the comments if you've tried to do it. I challenge you to take a left foot step, take another left foot step, take another left foot step, and tell me how far you've stretched before you started to pull a hamstring. You need to have that left foot and that right foot to give you that constant flow of advancement. And that's what a business plan gives you when transacting in property. So, it's good that you guys are doing it. It's good that you're having those reviews, because as an investor, if you're not doing that and really assessing, reflecting on your portfolio, you can't see where things went right or where it went wrong.
No.
And then be able to use that to then pivot. And you'll hear me, if you're hearing me in any podcasts that I always chat about, I always talk about a successful pivot. Are you at a stage where you should be looking at your capital growth, or are you at a stage where you do need to focus on cash flow? And that pivot you make in your journey is essential. And again, part of your business plan.
100%. Tell me, everyone at home, can they get in touch with you to discuss their property business plans? Obviously, you're a very successful accountant. You've been doing this for quite some time, and you do this for everyone. For every one of your clients. How do they get in touch with you?
Well, you can reach us out on our email, praediumpartners.com.au. I'm sure you guys will put a link into it in this channel. But yeah, if you need a little bit of help, I'm more than happy to give you guys a bit of a chance to have a chat. Now, again, I don't create a business plan for a client. I will read it. I'll definitely give my pointers on it. But if you're wanting your
you're doing what your dad's doing.
Absolutely.
You're making them show up.
Absolutely. You show up with your business plan. If you've put in the effort, I'll reciprocate that and give you, whatever words of wisdom I can, because it starts with you. You are responsible for your own portfolio. Yes, you can put some really good professionals around you, but you can only fool them for so long that you're interested in wanting to do this.
Yeah.
You've got to give 110% effort, and the professionals around you will give 120. So that's probably one of the biggest things I'll leave you, if you're listening here with today, is that you put in the effort, professionals around you will do it. Forget about goals, take the wishy-washy word out. You're here to create a business plan for the success of your property portfolio. Have an individual plan per property and have an overall arching business plan. And that's what big businesses do. Copy what big businesses do, because there's a formula, and that's a reason why they're worth billions of dollars today.
That's right. That's why they scale. Jeremy, well said. Thank you so much for your time.
Always a pleasure, mate.
Thank you, buddy. Cheers.
Thank you so much for joining us. Please like, subscribe, share with a friend, and we'll see you next time on Property Banter.